we just got this data in coming in a little bit cooler than anticipated, seeing some positive reaction, a little bit of action in the yield space here. But as Brad was mentioning, this is perhaps what was sort of anticipated. This is part of the narrative we've been seeing. What do you make of the data?
Well, I think that for now, it appears that the bad news appears to be good news. Mm-hmm. And the reason for that, the Fed put is alive. So the market is thinking, well, economic growth is slowing, but it's slowing gently. And so it creates conditions for the Fed to cut interest rates. And no one is at the moment expecting a hard landing. I'm probably not in that camp, but if you think about what investors, or majority of investors think, they think it's a gentle slowdown and then rates will go down and the party can continue.
When are you anticipating that first cut? And hopefully, yes, we all want the party to continue, but when do you anticipate that first cut?
Well, I would think that the end of the year is most likely, simply because of the political uncertainty. I don't think that the Fed would like to lose this perception of its independence. But I think that what is important is whether the Fed is reactive or proactive. If by the time that the Fed cuts rates, economic data deteriorates to the point that it's very hard to deny that the US economy is going into recession and the Fed is responding by cutting rates, I do not think it will help equity markets, simply because it will indicate that, well, we're already in a recession. Nothing can help equities at this point. However, if they cut rates and the economy is still strong, perhaps slowing gently, but it's still strong, but they manage to cut rates preemptively, I think that will prolong, the strong performance of the market.
Does it matter as much what the Federal Reserve does? Obviously it matters, but given the concentration of this rally being really driven by AI, driving 2/3 of the market rally so far this year, if people keep buying chips, does it matter what the Fed does?
I think to a degree. I would argue that it may not matter, when the Fed exactly cuts interest rates, but it matters what they say. And what is the perception of the market about the trajectory of interest rates? And we're talking about the first rate cut, but perhaps we need to think about the longer sort of time frame for rate cuts. And I think it will matter, and that's why everyone is listening to every single member of the Federal Open Market Committee so intently. In terms of the concentration of the market, this rally is a little bit longer than it is, and I would argue that the AI trade is kind of in a bubble. The difficult part of it, and there is always a caveat, bubbles can last for a while and they're very hard to time. And so this party could continue again just simply because there's still lots of money chasing these amazing AI stocks. But to my mind, what I see in the market, I would say that this rally is getting a little bit tired. If you look at equal weighted S&P 500, it hasn't really budged since March. And so you cannot really count on just a few stocks to carry the market much further. I think it's time to take profits.